not in Hawaii. I'm not in Hawaii this morning. Check this out, guys. I don't know if you can see this. I don't know if you guys can see these amazing mountains here in the background. Pretty nice, right? That's what I'm doing this morning. Which brings up another point, a really important point, and one that I preach almost daily to Clubhouse members. If you're an active investor, not a day trader, an active investor, you can do this stuff from anywhere. In fact, I actually just did a trade here on my phone, executing it right here from my paddleboard. Talk about freedom. I think this is the epitome of freedom. Being able to do your job and everything you love at the same time. Well, that was a great morning paddle. I am ready to attack these charts now. So what I want to talk about specifically today, guys, is energy stocks. I think energy stocks, they of course have had a really big rally so far this year. And a lot of folks I speak with, including just yesterday, a lot of traders, hedge funds, that kind of stuff around the globe actually that I spoke with yesterday, they continue to be very cautious on energy. Now, I respect that, but through the lens of investor psychology and looking at what the charts are actually showing us, we do have to consider the opposite move sort of as a potential to happen. So let's have a look at the charts and I'll show you guys the potential that energy stock can actually have to continue to rise and surprise a lot of folks, and by so doing, basically squeeze the entire market higher. So let's go look at the charts.
So let's look at the charts here and keep it nice and simple. The first chart we're going to look at is what I call a ratio chart. Very simple, guys, very simple, but it gives us a lot of perspective. So what I'm doing is I'm taking the XLE, which is the S&P 500 energy sector ETF, and dividing it by the SPY, which of course is the S&P 500 ETF. And you can see that energy stocks have been underperforming the S&P 500 basically since 2011. It's been pretty ugly, okay? So that downtrend that we've experienced over the past couple of years is nothing new. It just basically accelerated in 2014. Now, there have been several bounce attempts in this relative ratio, so energy stocks trying to outperform the S&P. Since 2014, there have been several attempts. So one attempt was basically here. This was in March of 2015. Then we had another relative strength point, which was in October period of last year. And then, of course, the rally here since the January, February lows. Now, 2 out of these 3 rallies have failed. In other words, the latest one we don't know just yet, but the latest one hasn't failed yet. Now, there's a couple things. For one, at some point, this relative weakness will stop. So I don't know when that is, of course, but if we look at it just through the lens of sort of a trend change, we're now starting to see a change of trend to the upside. These kind of big macro trends don't change overnight. They usually take, 2, 3, maybe sometimes 4 quarters to change. But now we're kind of, roughly 2 quarters into this, and we're still seeing this relative strength in energy stocks take place. So to keep that in mind. So that's number one. And if we now look at the XLE, and then you can see again here for perspective, since 2014, since that lower high in 2014, energy stocks have basically continued to trend lower all along or all below the 200-day moving average. It's just for perspective, okay? That's this red line. And you can see not only did it take a while for the energy sector to break above the 200-day, but we've now been above that 200-day since about the middle of April. So it's not like we've only been there above there for a couple of weeks. It's now been 2 months, okay? Now, again, that too in and of itself isn't a blind buying sign, but it is stuff to respect. So considering all the funds and not all, but literally like 95% of people I speak with, professional investors and folks that are high net worth that are included in the markets, a lot of those guys are a little bit more neutral, but they're still very much having a bearish opinion overall if you really listen to them on energy stocks. So considering all that, considering what I'm showing in the charts, I have to give a possibility to a continuation of this trend that we've seen in the XLE, i.e. energy stocks. And quite frankly, I think if we start breaking above those highs that we just saw here earlier in June, early this month, I think it could get a lot of people to scramble and start closing more short positions, and we could see a real squeeze higher. So take that for what it's worth. We're not there yet, but if we take out those June highs, roughly about 70-ish or so on a daily closing base, a little bit higher on the XLE, that, in my opinion, could lead to an upward squeeze. Again, it's not a trade I'm doing right now. It's not a trade I have on, but I'm trying to teach you something to see both sides. Hope this makes sense, guys. Also, guys, make sure to sign up for my Steady Income Using Options webinar. It's actually today, Wednesday, June 22nd as you can see here at 8 p.m. Eastern, 5 p.m. Pacific, what I'm going to talk to you about, what I'm going to teach you guys is my monthly income strategy. The most important thing for any trader, active investor, and even long-term investor is to have some sort of steady income. It eases the mind. It helps us not having to force trades. It gets rid of fears. If you can implement this strategy that I'm going to show you guys, for monthly income strategy, is going to not only give you monthly income, but it's also going to change the way that you approach the markets with much more patience. So please make sure to sign up for the webinar, and I hope to see you guys there.